All right, so let's look at this gold trade recap. Let me just change up the broker. Let's use this. Okay. All right, so coming from our 1 hour time frame, we could notice that we did have a shift. Price did give us this area as a lowest point, and that's the area responsible for that lowest point on 1 hour. So this is where our shift occurs from. Then we see that price offered as a first liquidation around this first area, which I was unable to take. So what happens that I had to capitalize on a continuation trade because I failed to get the initial move that had to be at this particular point. So after having missed that, what do you wait for it for price to give me a second shift or a second breakout to the upside after confirming this shift to the upside in a 1 hour time frame? Then the prices shift from there, and clearly this area did offer this level as the liquidity engineering point. There's a liquidity engineering on the 1 hour time frame that we took for the particular trade, and then you could refine this further to the 15-minute to just try and see and try to gauge your stop loss. What you would see here is that, of course, price offered this area and then slightly consumed it with this wick that came into the area. So these would be the two areas of which you're looking at, this area over here and then the area below here. So for this particular area, because remember, with Aperture trading style, we use limit orders. So we'll refine this area and just see if we can have a proper area to put our stop loss. Ideally, it's supposed to be around this point, but this area is consumed, so this will be the area responsible. So you measure the risk on this, and 50 pips is always okay, but just in case, you'll be able to refine this further to the 3 or the 5-minute time frame to see if you have a more reasonable area to refine the trade to. And then when you come to this particular area in the lower time frame, you would see that probably have a liquidity near an L time frame. If you look at the structure clearly, you'd have a liquidity nearing somewhere here, probably in the 30 seconds that was unconsumed. Let's see if the 1 minute can offer us something sensible to work with. So yeah, you would say that this unconsumed liquidity engineering at this level here, that could as well refine to this area here, that particular area of liquidity. And you'd say that could have reduced your risk to about 10 pips. So remember, we got this on 1 hour time frame. So you want to idealize where your next target is going to be. Remember now at this point, since price has broken out, you expect price to return into the internal liquidity and target the external liquidity. And if it's continuing that trend to go to the next area of liquidity, which is over here. Remember, I did take the buys for 300 pips and I took the sells as well. We're going to look at sells. We're going to look at the sells too. So this was the buy, in gold. So it just sniper entry, the particular area. Then of course you take profit to be at this level here. Now with this other targets, you really want to connect to a higher time frame to see. So you have an area overlapping with it for the 4 hour. So that's going to be an area where you expect a retracement. Yeah? This was the buy-in. So the retracement, when you know that price coming back below this area, so you could set the 4 hour had given us this breakout. So you understand that when you have a 4 hour breakout, we now connect to the 30-minute time frame, try and look for those particular cells. So these particular cells, the highest point was over here, the price had created, and this was the low responsible for that high there. So what you need is price to first breakout of this particular low and close below, which was over this. Then you'd wait for retracement to an area of liquidity that the price had given us. So the reason why this area here is not a consumption is because this candlestick that consumed didn't close below the wick over here. So this consumption is not valid. So this area is still valid. That's the area we're going to look for those second cells that came in. And this came off based confirmation. So you could say price came into this liquidity engineering over here. So liquidity engineering over here. And after coming into liquidity engineering, price went ahead and performed what we call a transition. It's not quite like a shift, but it's a transition. But for confirmation purposes, always tend to hold price, and you can say price came back and then triggered us on those particular cells. Now I took this as a retracement, so my take profit wasn't so far. I just for the breakout on the 1H, the previous breakout on the left-hand side, which was over here, and that was the target. So it was nice and easy. So the first one was 300, and this one was about 115, 100 and something, where I moved out to 116. Yes, this was the particular gold trade and the thought process behind it. Yeah, so that's it for this particular recap. Nice and easy, 300 plus 100, 400 pips. You're risking 10 on this, risking 9 on this. So 10, 10. So yeah, that's probably like a 1 to 40. So yeah, till next time.